Blockchain is one of the technologies highly cited as potentially revolutionizing the financial industry. Professor Simon Johnson will be speaking about his research in this area and educate us on the opportunities and challenges of using this technology. Professor Simon has been a leader in a number of fields, including financial disruption. He's been a founding member of Sheila Baer's Financial Advisory Committee, and also a member of the Treasury's Office of Financial Research on their advisory committee. He is a professor of entrepreneurship at Sloan Management School, and also heads the Global Economics and Management Group, and also a member of the Executive Committee. He also has co-founded and is personally the leader of the highly popular G-Lab effort. So, without further ado, Professor Simon.
Thanks very much for the introduction. Thanks to Dave Schmidtlein and the Sloan School for putting this together. And thanks to Antoinette for your leadership in this area, the intellectual leadership, the course leadership, and a fantastic presentation that certainly raised my blood pressure at the end. And we'll talk about that in a moment. Now, Dave asked you, we now have a series of short talks. I'm with you just until 11:30. Dave asked you to do 5 things for the Sloan School. I actually don't remember what they were, except the one about the money at the end. That's important. But I want you to do one thing only, right? What did Simon Johnson talk about? What do I remember from I have no idea. It was blockchain something. But one thing, if I catch your interest at all, or if Brad Peterson, who's going to come after me from NASDAQ, catches your interest with any of his blockchain-related remarks, don't believe me, listen to one of the leaders in the industry. If any of this catches your attention, come and see us at MIT on Thursday evenings. Now, we are at MIT most other days of the week. I agree with that. You can come see me anytime you want. But on Thursday evenings from 6:15 to 7:45, we have an informal dinner around blockchain technology. Where is it going? Both from the technology side, this is a joint project with the Media Lab and with a lot of computer science people at MIT, but this Thursday evenings is focused at the Sloan School. It's about business applications. It's about where does this go as a business, and we have some fantastic outside speakers. Brad spoke to us last semester. We have some great technology and ideas being developed within MIT. I'm claiming credit or an assist, a modest assist on 3 companies that came out of MIT last year trying to use blockchain technology in various ways. So come and be part of that conversation. Some of you have already participated. You are all absolutely welcome. It is open to everybody, and including absolutely everybody from our alumni community. Thursday evenings, 6:15 to 7:45. So three substantive points that I would like to now make, and then we'll have time for Q&A. Very short points, very focused points. And this is important. This is a recorded session with journalists present. I am not speaking for MIT. I can assure you with great certainty, no MIT policy or statement on blockchain or Bitcoin or anything like that. I am a faculty member, a very active participant in the Digital Currency Initiative at MIT. I am not speaking for them this morning at all. I'm only speaking for myself very, very personally. The 3 things that I'd like to say. How big, this is the question we put for this session, how big will the impact really be, by implication on finance? But actually, the question is much broader than finance. It is a very fascinating question for finance. There will be a big impact on many things that you care about, including clearing and settlement in all U.S. securities markets, for example, and again, ask Brad the questions about that. But this is potentially much larger because we're talking about a different way of organizing economic transactions, and specifically what we're talking about is the potential to, well, not just disrupt, but do away with many of the forms of intermediation that we've become accustomed to. Now, I don't think it's the end of finance. I don't think it's the end of intermediation. I don't even think it's the end of all financial intermediaries. But the technologies that we are seeing are ones in which people, so we've obviously had this term peer-to-peer for quite a long time. Peer-to-peer, as many of you know, a lot of it turns out to be peer-to-hedge fund. I mean, that's the way the industry's gone. This is different. What I'm talking about, the blockchain technology, decentralized ledgers, and the ways in which you can run those, this is genuinely individuals to individuals companies to companies, peer-to-peer, if you like, without whatever the intermediary is you'd like to disrupt. Is it the bank? Is it the government? Right? Is it the credit card companies? I'm a bit more focused on them after listening to Antoinette. All of these mechanisms that we take for granted, that are part of the landscape. Yeah, of course the credit card company can get this information on me. I have to provide this information in all kinds of ways. I lose control over my data. They start to be able to make these decisions that Antoinette just laid out for you rather vividly. All of that is now under threat. Now, I actually think that the biggest changes we'll see will be outside the United States. We'll see them in places where intermediaries are less functional, less efficient. You've got higher costs, bigger impediments, more frictions, whatever kind of terminology you want to use. I think the impact will be potentially very big in low-income countries, but you also need at least fundamentals of the legal infrastructure to make some of this work. And we've not yet seen, I'm not yet convinced that we'll break through on that. I think middle-income countries have got a fantastic opportunity here. If you've got good enough legal infrastructure, but the intermediaries are kind of clunky, you've got a rather protected market, you've got a small group of families running the economy, whatever it is, those people are really going to be challenged and disrupted by this. So the answer to the first question is it's very big and really, really demands your attention. And I tell everyone that the first time the internet was really brought to my attention and somebody demonstrated to me what you could do in terms of looking at information elsewhere in the world, it's a very good friend of mine. 1993, I can visualize exactly where we were in his living room in Toronto, and he showed me this website that was a cat giving personal advice. It was called Ask Mr. Puddy. Now, it was interesting. It was quite entertaining for about 3 minutes, and the impression I took from that was, well, this technology is not really going to have much impact, right? So you don't have that excuse anymore, right? Because I'm telling you, don't just listen to me. Come hang out with us on Thursday evenings. Talk to Brad Peterson, talk to other people in this space. It is going to be very big. Now, the second point, so Antoinette made this remark about economists not having a crystal ball. So I guess I'm going to break with the union rules on that one, Antoinette, and look into my crystal ball. Because if you follow this at all, the really, really big, interesting issue is the following. If we're building a new technology stack, and if the analogy of the internet is correct, there's got to be a fundamental layer of that stack. And the question is, what's going to be the protocol on which we build these peer-to-peer financial transactions or non-financial transactions that are linked into this financial decentralized ledger, a different approach to database? And the two big competing ideas are, one, we'll do it with what people like to call the public blockchain, and perhaps within that, Bitcoin, which I know already makes some people feel nervous when I say the word. Or we'll do it with some form of private blockchain, some company or set of companies, could be the tech companies, could be the finance companies, perhaps it involves the government, that they will come up with a private blockchain. And it won't be the verification of transactions by many anonymous nodes scattered around the world. It'll be something where we have so-called trusted nodes, and they'll be running the blockchain. So this competition is open. This is what we're fighting about right now, and discussing and arguing and people are investing in. I think, and I reserve the right to revise my opinion on the basis of new data on a daily basis on this, but I think right now, on this Friday in September, I think it will be the Bitcoin blockchain. Now, why do I think that? Antoinette showed you some good slides about where's the money going, where's the venture capital going. So follow the money, very good principle in this kind of situation, sure. I think, though, and you're all interested in leading indicators. You would love to be ahead of the market on this, right? Either some of this is absolutely investable, maybe not as much as you would like. This totally matters for what kind of human capital do you hire into your organizations. And here's the really big one: what should you teach? What should you tell your children to study? Okay, get this one right, and you're set for your retirement. So here's the thing to look for and check for yourself. Where's the talent? Where are the people, the smart programmers going? What are they working on? Okay? And the interesting thing here is, we've got Christian Catalini, big export innovation, speaking next. The really interesting question here in terms of measurement is they don't publish, they don't patent this. You've got to go out and talk to them and find the people and make your own judgment about where the talent is. And I think, you know, at MIT, we have a great window into this. We don't know everything, obviously. But what I see right now is the programming talent focused on that base layer of the stack around the Bitcoin blockchain. Yes, Ethereum also serious contender, but it suffered some blows recently, as you know from the press. Other crypto coins, sure, it's competition. This is the market at work. But, you know, remember, and Antoinette made this point, actually, a very important point about tech spending, and where was the tech spending, for example, in the 1990s? Absolutely important to remember that big established companies, some of them represented in this room, had a major impact on the development of the internet. But with regards to competing protocols that were put forward at the beginning, including attempts by very big, powerful tech companies to write that and control that base layer of the internet, they did not win. They ended up adopting the internet, actually, and going with an open, free protocol. And I think that's what's going to prevail in this space also. But it's all open. It's all open for competition. It's open for investors. It's open for smart people like you to get involved in all kinds of interesting ways. So the third point, though, that I really need to flag for you, particularly because of who you are and where we're sitting, and is, of course, about regulation. And that was immediately, as soon as Antoinette made her points about finance, you were right there with, OK, where's the CFPB on this? How does this fit in with, you know, why does the government allow this? What's legal? What's not legal? This is a highly regulated industry, right? And you know this very well. So, and I spend a lot of time on this issue. I was previously the chief economist at the International Monetary Fund. I spent a lot of time in Washington, D.C., talking with people about various dimensions of financial regulation. And I fully understand that the decisions to be made in this space are not only going to be made by central banks. There's a lot of other players. But we're talking about money, and we're talking about potentially changing some dimension of the monetary system. I don't think Bitcoin or any of these cryptocurrencies is going to displace the US dollar. That's not the point. But it is absolutely a new technology for making payments and recording transactions in that payment layer, which is what we think is developing. And the central banks absolutely care about this and have responsibility. So you might think, and it would be quite a reasonable initial reaction, and this was part of what I thought would be happening when I first got involved in these issues. You might think that the central banks, the major central banks, the G7 central banks, for example, would be extremely skeptical, resistant, trying to prevent this kind of technology from developing. Now, again, this is only Simon Johnson speaking, totally not any other central bank. But there are a lot of really interesting conversations happening now at the technology level, at the policy level. The Bank of England has also, their senior officials have made a number of really insightful speeches on this topic, and I commend them, those speeches to you for close attention. The central bank perspective, so G7, thought leader category of central bankers, is absolutely not to refuse this technology, to try and shut it down, or even to prevent it from developing at a rapid speed. Why is that? What is it that interests them about it? Well, partly it's what Antoinette said and what Armand referred to already today, which is technology is coming. You're not going to stand in the way. And anybody, all you have to do is say, well, guys, internet 1993, here we go again. And it would be, it's like King Canute trying to turn back the ocean. Well, sorry to bring in that British history for you, but not going to work. All right, technology is coming. Secondly, central bank responsibility, unfinished business, financial stability. Okay, big conversation, lots of open topics. We could do 3 or 4 conferences just on that. But what's the heart of the problem we grapple with on financial stability? It is for various reasons, some good and some perhaps less compelling. We have built a system in which there are some critical nodes, some points of failure if, well, I can talk about tri-party repo, for example, with you, and I can talk about it in part because we've made great progress in changing this, and BNY Mellon is giving a really great talk to broader audiences about the work they've done and the cooperative work between the private sector and the public sector in forming this market. So this is an instance where there was great fear in September and into October 2008 that this critical node of the financial system would fail. Now, if we're offering a technology and the potential for a technology to develop with more robustness in that system, and if that robustness is not only in terms of it's not going to fail when somebody has too much debt and the bankruptcy courts can't handle that at short notice, or it will trigger further runs, which is obviously the dynamic of 2008. It's also got to be super robust from a cybersecurity point of view, and we are not there yet. Don't get me wrong. I'm not saying this is ready. Okay? But from a central banking policy perspective, if you can change that dynamic around financial stability with better use of a decentralized system and a robust system, that is extremely interesting. And if you have any ideas, or if you want to follow this at all, you should look at the Bank of England's request for comment on their proposal for the modernization of their real-time gross settlement system. They just put that out this morning, actually. That is where the action is. And that debate about what they should do with RTGS is absolutely at the forefront of where this is going from a technological perspective and from a business perspective. So again, if the New Yorker writes that up in 10 years, you have no excuse for having missed that one. Financial inclusion. Not necessarily, not always the central bank responsibility, but absolutely on the policy agenda, including in G7 countries and G20 and much more broadly. And you know, Antoinette gave you a vivid, compelling example of why you should care. If you have a financial system in which the poor get one deal and the rich get another deal, you, and I mean you and me, have got a problem. Okay? Now, it may be okay from an economic efficiency point of view, it may be okay from a legal point of view, but if that's a financial system that's on offer, if the high cost of being poor stays like a high cost and does not get addressed, including by the smart people in this room, you are going to get a lot of blowback. And so is everybody involved in this industry. Now, I don't want this, I'm going to take some questions now, but I am not arguing that central banks must make themselves central to this, and that central banks have an opportunity to take on a lot more power and responsibility here. I am actually on the side of people who are rather hesitant to go there, because the more the central bank takes on, the bigger its mandate, the more pressure they face, and the more politics you put in central banking, the worse it should be. And Roberto Rigobon can tell you about that this afternoon if you want to ask him. He's one of the world's experts on that question. So I'm not saying take the central banks in that direction, but there is going to be, there should be, and there is going to be, I think, a big push on financial inclusion. And financial inclusion sensible, genuine financial inclusion with equal privacy for everyone. We cannot build a financial system in which rich people have privacy and poor people do not. Okay? And that may seem like an obvious or simplistic statement. Believe me, that is the center of a lot of hard discussions right now as well. So we have the potential to build a better, more decentralized financial system. We are going to work on this very hard at MIT. You can participate in this with us. You can come see us on Thursday evenings. Any Thursday between now and the end of the spring semester, we'll be there. Thank you very much.
So just hold it up to your face. I'm going to toss it.
Yeah, they actually promised me they'd throw these boxes. Yeah, I've never seen that before, and the legal implications of that are pretty dramatic. But go ahead while it's still allowed by regulators.
Okay. In Europe, they tried like a wholesale change in technology with the Target 2, and that began in 2006, right? So 10 years later, it cost $2 billion, and it's probably going to take another 2 years before it's rolled out. And they expect it to begin, the system will pay for itself in 2026. So now there's this whole talk about blockchain. Do you think it's, how would I say, if you look at cost for systems for banking, I mean, to maintain the operational systems now, they cost $150 billion a year, plus a lot of fees and so on. I see all the advantages for blockchain, but do you think then we're probably overestimating it, or maybe it's not investing enough? Because the blockchain technology firms now, they're all really small. I mean, very few of them have more than 100 employees. And I mean, to go wholesale for banking, there will be needed like some serious investing.
Well, yes to all of the above, and that's why
So
we're having
will
the
it
conversation.
happen?
If I come in 2 years, this is not going to be an interesting conversation because we will have figured these things out. That's one thing. Second thing is meet Brad Peterson. He can solve your problems over here. So I just like my usual commission on that connection, Brad, which is 0. You know, I think what you started, I think what your the sort of way you framed it, which is a good way to frame it, is top-down, you know, directed IT spends turn out to be really expensive and fall behind. And that's what, you should look at this Bank of England request, because that's what they don't want to do. They want to build a system that will modernize RTGS today, I think in a non-blockchain basis, but on a more, they would say, more robust basis than what they have. But they also want to build something that's open to, that has an architecture that is going to be supportive of and consistent with what comes next, which seems like it's going to be something that's more decentralized, subject to the private versus public blockchain issue that I'm talking about. Look, this is all up for grabs. This is what we're working on. I mean, this is live stuff. I don't know exactly where it's going to go, but if you figure this out, if you invest in this space, if you personally or from a corporate perspective, you're going to do well. Who has the next box? I have no idea. It's all new to me, but be careful. That's all I can say. Okay, it's not. Your box is not on. We've got to
box is off.
The off box.
I've got the on. Oh, I've got the on box now. So, Simon, thank you for this, and I'm glad I brought up the question of the CFPB before, but not to put words in your mouth. But what I infer is you were suggesting that the segmentation that Antoinette was describing so well before is somehow wrong. Is that what you were suggesting? I'm not sure myself, to be perfectly honest, but it sounded like you were suggesting that sort of segmentation was wrong.
Well, Antoinette is the expert on this, not me. I don't think she said anybody's breaking the law, and then you had a good discussion, for example, about is it redlining, what does redlining mean, and so on and so forth. You know, I would put it this way. I think in terms of finance, private sector versus regulation, if you like that versus in there, which probably many of you do, I think we've reached something of an impasse or a stalemate or a standoff, right? We are where we are on the financial stability side, on the consumer protection side, and so on. I think the technology is introducing a new, powerful, different dimension to that conversation, which is what if we start to organize our data and protect our data in a different way because we're changing the way in which we transact? What kind of system do we build? Do we build a system based on that technology with more data protection for individuals and easier ways to rebuild your credit record and to become included in the lower cost financial system? Or do we build a system which reinforces the existing and, frankly, quite extreme income inequalities that we have in this country? I think it's all up for grabs on that one. And I'm on the side of saying let's have something that's generally democratic and generally protects individual rights on a completely equal basis. I think that's a better financial system, and I think that's what we've had at some moments in the past in the US, and I think we've drifted a bit away from that. That's my personal take. I took Antoinette's remarks as being more inspirational for the new technology. That's where I'm coming from. That was a definite throw, yeah.
So how do we see the reconciliation of the privacy that Bitcoin and other cryptocurrencies give and like compliance requirements as anti-money laundering?
Yeah, so it's a great question. So Bitcoin promises or has the potential to give you substantial privacy or pseudonymity. We have, at the same time, a lot of disclosure requirements. And where the interesting space here, if you want to pay close attention to it and get beyond the 30-second answer, is in anti-money laundering, know your customer. So people who are very deeply in this, dealing with this issue, I mean, we all agree it's important and it's not going to go away. People who spend a lot of time on existing systems emphasize that they are not particularly good systems, that they don't fit together well, a lot of information is lost. There is a very big problem that is not perhaps on the top of your radar, but for important parts of the world, it's huge, which is de-risking. The term given for the idea that banks and other people trying to do financial transactions, including just people doing import-export, are cut off from corresponding banking relationships and also access to credit, for example, in the Caribbean. very big issue right now. And that's primarily because what they are doing and who they are and how they appear in banks and bank-related information systems sets off flags for compliance officers, and they say, let's not have those transactions. Now, that's a small part of a Canadian bank's balance sheet, and then they are no doubt being appropriately careful. But for millions of people in important parts of the world, this is trouble. This is slowing down economic growth. And if we have a better solution on the anti-money laundering Know Your Customer, and a better solution built in a system from scratch, the sort of thing Bill Orlett and his colleagues put together and help people build at the Entrepreneurship Center at MIT, I think this is going to have very positive consequences in terms of availability of credit as appropriate, for example, for trade, and you get better compliance. I don't have that system to present to you today, but that's why this is an interesting moment to have this conversation, because someone will build this and someone will do really well. Yeah, last point, sorry, last one.
Hi. Can you be specific about a country or a society where you think blockchain may come off in a big way? Would India, China, those societies, you think about economies?
Oh, yes. I thought you were asking me for the philosophy of the structure of society that will emerge from Bitcoin, which I do have a talk on, but it takes a little bit longer. Yes, but your question has a good point. India and China, yes, absolutely. So places that are middle income, growth potential, structural reform of various kinds. Now, China actually has some really quite well-run intermediaries, as you know, and some really interesting financial innovation around payments. So I'm not saying all of that gets necessarily knocked out of the way, but the set of countries that has real growth potential and they're held back by these frictions and the inefficient intermediaries, including the government. I would stress that this is not just a private sector intermediation issue, it's a government intermediation issue. All of those countries can gain in a really big way.
How is blockchain technology related to financial inclusion? 30 seconds.
That's the question. That's the question that Antoinette, I think, framed, and I'm taking that up with you, which is it remains to be seen. And I think that is, I understand you're pretty skeptical about public policy in many ways in which it touches your sector, with some justification. But this is and should be a huge priority for public policy to get this right and to allow a lot of private sector competition to build systems that compete with each other to provide better access to finance, more financial inclusion through genuine market competition. But if you don't have the right regulatory structure, I think you'll get outcomes that you regret. Anyway, come see us Thursday evenings, MIT. Thank you very much.